The United States has a massive government debt. It owes trillions of dollars mostly by selling investors treasury securities called T-bills, T-notes, and T-bonds.
These securities or treasuries are basically IOUs from the U.S. government. An investor who buys a $10,000 treasury is lending the U.S. government $10,000. These treasuries are bought at a discount, and the T-notes and bonds also earn interest. That's how investors make their money. Why does the United States sell these treasuries? Well, it has a lot to do with the U.S. deficit. Deficit and debt. These two are related, but not the same thing. Let's first define a government's budget deficit. Lee Riddick is with American University.
So think of the government as a cigar box. I call it the cigar box model of business. Cash comes in, cash goes out. If you run out of cash to go out and you still owe money, you have to get more cash. And the way you do it is you raise taxes or you sell these government instruments.
Fred Utes is with George Washington University.
In a given year, the government will spend, let's say, $100 million. Its tax revenues will be $90 million. So in that case, it has a government deficit of minus $10 million. That minus $10 million has to come from somewhere.
Yes, it does. It comes from selling these treasuries. This is how a country builds national debt. The U.S. has recently run huge budget deficits over time and has sold more than $13 trillion in treasuries to cover these deficits. That's a $13 trillion national debt. This kind of problem is destabilizing Greece right now. For years, Greece has been running large deficits. The government recently has made drastic cuts in spending. Naveen Sarna is with Northern Virginia Community College.
Greece has been overspending. There is tremendous amount of tax evasion in the country. People are not happy. They are on the streets, and they are not willing to accept what the Greece government has to offer. So if this thing continues, now clearly as an outsider, as a foreign person, if I want to invest in Greece, I will be skeptical of putting my funds there.
And Greece is not the only country in Europe with large debt problems.
Countries like Italy, countries like Spain, countries like Portugal, Ireland, these are all being very closely being monitored by the international markets and the international investors.
The fear recently in Europe is that one country's debt crisis could soon infect a large portion of the continent and bring on another severe recession. And many say this fear also applies to the United States. The U.S. has, over the past 10 years, run these large annual deficits, leading to the selling of those government securities. China alone owns over $900 billion of this $13 trillion debt. Yes, buying these securities is actually buying debt.
If China were to stop buying our debt, we would probably have to offer higher interest rates to get other people to buy it. That would cost us more money. This would not be a good thing.
Economists say U.S. Treasury instruments are still one of the least risky investments available today.
Because it has the full support and backing of the U.S. government.
The U.S. government it appears like it's not going to go out of business and thus won't be able to pay off the bonds.
And the joke we make in the classroom is that if the U.S. government defaults, the least of our worries is what happens to a T-bill.
But Greece is different. The European Union and the International Monetary Fund have devised a financial rescue plan to save Greece from bankruptcy. Bankruptcy would make those IOUs of Greece, their version of our treasury securities, virtually worthless. And that could cause yet another recession in Europe, and possibly beyond. And now you know.